I'm very pleased to welcome back to the show Dr. Michael Barry. Now, I love having him on. Discovery Journals. But what I really love about him is he, first of all, his expertise, but he's got the inside scoop on what goes on with the Federal Reserve, disruptive discovery journals. But you can find him at discoveryinvesting.com. Discoveryinvesting.com. Dr. Michael Barry joins us again. Michael, thanks so much for finding time. Really appreciate it.
My pleasure, always, Michael, to come on. Thank you for having me.
Well, it's a perfect time to chat. I mean, first of all, the stuff you do and you present to the Federal Reserve twice a year. My goodness, it's incredible how the entire investment market seems to hold their breath every time Janet Yellen's opened her mouth and Ben Bernanke before that. I mean, it seems to be the key component actually operating in the investment markets.
Well, it is because they keep going back on their intentions. Yes, they have raised rates a little bit. But at present, even now, the economy is soft. And so they're sort of hedging themselves. They keep saying we want to raise. They keep wanting to sell off their huge Treasury portfolio, and they think they can do that without affecting the Treasury market. It's unlikely that they can do that. So they're still not sure how to move forward with this. What's really interesting, Michael, is that as of November, when it was clear that Trump had won the election, the Fed was saved because the last time that I was there, they had no idea how to really get out of the trap they were in. They had just monetized so much money. And so all of a sudden, the capital markets took off, especially the stock market, anticipating a Trump recovery, I guess you could say. And the Fed then felt they had the leeway to raise rates. And so it was overnight. It was literally overnight. Now the question is, are we really at the stage of a recovery, or are the politicians in Washington and the witch hunt that's going on going to sabotage that recovery? That's the real question that we have to face now. The equity markets want it so badly, and they're still bidding up. But if you look at the bond market, and the bond market tells the truth an awful lot, it's still not showing inflation. It's not showing a recovery in the numbers that are coming out now. So it's the 10-year bond is an interesting one to watch.
Why are the Federal Reserve and other central banks so desperate to raise rates? What's the motivation there?
They can't stay on the zero bound. They have to get off the zero bound. Negative rates are anathema to a banker. There's no way. They do not know how to handle negative real rates. Negative real rates are difficult. And there's no theory that allows them to deal with negative real rates. So they have to get off the zero bound as quickly as they can because in the next recession, and there certainly will be another recession at some point, interest rate is the only reasonable policy that you have to confront it with. If interest rates, real or nominal rates, are near zero, there's no tool to. Yeah,
so we get into a slow economy. They got nothing in the bag to try and spur it on there. So that's a key. I want to come back to a very interesting point you're making. I mean, the markets were clearly spooked about a week ago when they thought, or it started becoming accepted, that maybe there was going to be a stall to the Trump economic agenda, and that would be lower taxes, less regulations, the infrastructure spending, what have you. It's interesting to note that this puts the Federal Reserve in a bit of a bind because they're kind of hoping that goes through so they have some room to act.
Absolutely. Or can they act before it's clear that it doesn't go through? In other words, can they get off all they want to do is get off the zero bound and sell off their bond portfolio. They have to do that. And so the real question for them is, can we sneak another couple of interest rate hikes in this year without damaging the economy? It's not clear. Actually, if you follow the trip to Saudi Arabia, and especially to Saudi Arabia, you've got big hedge funds like Blackwater putting together a $50 billion infrastructure fund and going to U.S. institutions to fund it, as well as the Saudis. So there's an expectation in the capital market, in the stock market, that this thing is going to happen. And so the stock market merrily goes along and the bond market disagrees. So it's a really interesting situation for the Fed. The Fed deals with the bond market. They don't really care about the stock market all that much.
And what are the probabilities now? Because June would be the next rise, obviously, next month. And it is fascinating. I mean, they made those promises last year. They did rise, I think it was December. Then we didn't in March. Now everyone starts looking to June. What's the probability, you think, at this point?
Well, I think there's a good probability for another rate increase, 25 basis points on the Fed funds, the overnight rate. I'd say 60-40 on that. But they're going to be very cautious about too many more rates. They need to get to 2.5% or more on the Fed funds, and I just think that's going to be a real stretch for them to do. So what everybody's kind of looking at now is we all know there's a witch hunt going on in Washington. We know that President Trump is not a politician. He shoots himself in the foot more than he helps himself, but he's got some of his ideas are correct. And so basically, we're all waiting to see what kind of legislation will pass. Will we get a tax cut? If we get a tax cut, within 2 years, we'll have 3 or 4% growth, and we'll be out of it. If we don't get a tax cut, then all bets are off. It's just the way it is.
I find it amazing that you have a Republican Congress, a Republican Senate, and he still can't get any legislation through. Now, granted, he's certainly not a Republican, if you know what I mean. He's an outsider,
exactly.
And that's obviously playing into it a great deal. As you said also, he certainly doesn't seem to have, at least in one area, political smarts. He shoots himself in the foot on a regular basis, and he causes a lot of his own problems. But still, at the same time, I would have thought the Republicans would have embraced, the tax reduction scenario.
I think they do, and I think the Democrats will. The question is, a lot of this legislation that's come out is very basic. It's very top level legislation, and so there's a lot of perks in the tax code down here in the U.S.
Yeah.
And some people are going to be hurt by it. So same thing with the medical system. The Dems want a one-payer system like Canada has, and that's not what's being proposed. So these are really tough issues, and it's going to take all of the next 2 or 3 or 4 years to solve them. And it's going to be interesting to see what happens in the 2018 congressional elections. That will be interesting. That will be the time when Americans say either we believe in Trump and we want to go this way, or we don't. But the tax cut needs to come, but it needs to be much more detailed.
Interesting. I'm looking at also they've reopened. There's an official renegotiation of NAFTA. Now it's official. We knew it was coming, but now it's actually made official. There's so many other uncertainties regarding trade agreements, that kind of thing, that certainly doesn't help the kind of environment for a Federal Reserve looking whether they should raise rates or not, because it's certainly not. We just had our rates in Canada kept the same for the 15th consecutive time, and the bottom line is they felt there was still too much uncertainty in the environment. Obviously NAFTA is a big part of the Canadian economy, but it's just fascinating to see the kind of environment they have to make these decisions in. We can't afford any more mistakes, that's for sure.
No, and it's a different environment now. It's not a manufacturing environment. President Trump seems to think we can make America great again like it was in the 50s and 60s and 70s with a manufacturing economy. It's not that economy anymore. It's quite different. It's quite a different economy. And so everybody has to kind of embrace that, I think, down here. I look at the velocity of money. It's still falling here. The velocity of M1 is still falling, and the banks still really aren't lending. So all of these things have to change, and I think the view that he has, that he won the election on, is that we can make America a great manufacturing nation again, and I just don't. That doesn't fly. That's not going to fly. Yeah. It's a different world that we live in.
I couldn't agree more. So, I mean, tell me about. Let me finish with this. By the way, I'm talking with Dr. Michael Berry, DiscoveryInvesting.com. You can find him there. So, what does an individual investor do looking in this kind of environment? I mentioned the word uncertainty about 700 times so far. That's the environment we find ourselves in.
I always say, if gold hasn't prospered in this economy. It's still at about $12.50 or $12.60. It was up $11 yesterday. Silver's still at $17, and we're basically running out of silver. they're not producing, and silver is actually an important industrial. I say the same thing. You have to be diversified, and you have to change your diversity. I think the stock markets are way overvalued here relative to earnings. So a lot of what we see in this has been the Trump effect. Mm-hmm. And a lot of people believe the Trump effect will not last if some of this legislation does not go through, i.e. the tax legislation, the medical care legislation, and so on. So right now, there's been no crime committed, but it seems like people want to impeach him, at least on the Democratic side. So there's just a lot of uncertainty in this market. I'm amazed that the stock market is still as high as it became right after his election. This is the Trump effect right now. I think you diversify, to answer your question, and I think you diversify a little bit out of equities at this stage of the game and into fixed income and into non-taxable kinds of things. That's where I'm at right now. Yeah. Gold, people are saying gold's got to go up. Interestingly enough, we saw Bitcoin has doubled.
Yeah.
And a lot of people feel that's Asia substituting Bitcoin for gold. I don't know. That's what I've read. I don't know if that's the case or not. But so people are searching for alternative investments right now. And
just one last question here about the bond market. Would you hold longer-term bonds in this environment?
Yes, I would. I would have
Okay.
I do. I have an allocation to longer-term bonds in this market. Yes. Yeah.
This is such a fascinating time. I want to thank you for taking time and sharing that with us, and hope we can visit again real soon, because we both know there'll be lots to still talk about.
Yeah, we'll follow the Fed.
Yeah, absolutely. Dr. Michael Barry, DiscoveryInvesting.com. We're so lucky to have him join us on a regular basis here on Money Talks.